Markets continue to show strength, adding to the gains that we saw last week. Benchmarks touching new life highs in trade, led by gains in index heavyweights, ICICI Bank, ITC, Reliance and Infosys. Nifty touching a fresh high again. It's a fresh record of 18,543 before closing the day up about 100 odd points there, 0.7%. Sensex also closing close to 500 points once again, hitting a fresh high of 61,963 this session, closing at 61,765. Strong Q2 earnings, a record vaccination drive and revival in demand ahead of festive season are seen as strong factors supporting those higher moves. Metal, banking, IT, some of the pockets that did well, and they closed with gains of between 2 to 4% across those sectoral indices. Top Nifty gainers, Hindalco, Infosys, Tech Mahindra, JSW Steel, Tata Motors on the top of the charts there. If we take a look at the screen, Hindalco up over 5%. The tech majors still seeing strong moves coming in. So metals, commodities and a Tata Motor continuing to see gains as well. In terms of laggards, we had Dr. Reddy's, Asian Paints, Britannia, some of the names there on the downside, about on average about a 2% cut coming in, and a mixed bag there. But clearly some of the defenses just sitting out somewhat in trade. Bharat's defense was once again the star of the Lal Street, locking in at the 20% upper circuit mark after its board approved the formation of an associate company to maintain, service and repair defense equipment. The new company will be formed in a JV with Krasny Defense Technologies Limited. Bharat today was up about 125 rupees, closing at 750.35 rupees. That's over 300% higher than its issue price of 175 rupees per share. Three major public issues expected to hit markets soon. SEBI has green-lighted the IPOs of Star Health Insurance, Adani Wilmar and fashion retailer Nykaa. Now, Star Health Insurance, the largest private sector health insurance in the country, is looking at raising 5,500 crore rupees. It comprises a fresh issue of 2,000 crores and an offer for sale for the rest by existing shareholders. One of the big investors in Star Health is Rakesh Junjunwala. Adani Wilmar is meanwhile looking at raising 4,500 crore rupees via fresh equity. The prospectus had been put on hold by SEBI for a few weeks. The brand owns the Fortune brand of edible oils, and this will be the seventh from the Adani Group to be listed. The third big IPO is that of FSN E-Commerce Ventures. That's the parent of fashion retailer Nykaa. The issue will raise 3,500 to 4,000 crore rupees for the company via a combination of fresh equity and promoter equity sale. The issue values the company at around $5 billion. China, the world's second largest economy, is witnessing a sharp slowdown in its growth rate as power shortage, supply chain disruptions and a struggling real estate sector limited July to September GDP to just 4.9%. Here's more on the big Chinese slowdown.
The dragon isn't down and out, but it is breathing slow for sure. At 4.9%, Chinese GDP grew the slowest in the July-September third quarter this year. This was slower than 7.9% in the second quarter and significantly down from 18.3% in the first quarter. Data from China's National Bureau of Statistics suggest the country's economy is hurting from a slew of challenges, including power shortages, supply chain bottlenecks and major wobbles in the property market. All this raises pressure on policymakers to do more to prop up the faltering recovery. Despite the drop in growth, the government says it is confident the targets will be met.
On the whole, the economy continues to recover and the trend towards high-quality development is constantly changing. And it has the ability and conditions to complete the expected goals and tasks for economic and social development throughout the year.
The world's second-largest economy is facing several major challenges, including the Evergrande Group, which is struggling with debts of more than $300 billion, ongoing supply chain delays and critical electricity crunch, which sent factory output to its weakest since early 2020, when heavy COVID-19 curbs were in place. Meanwhile, there are signs that the worst may not be over yet. The fallout of the energy crunch is expected to continue. The only bright spot was September retail sales, which grew at a better rate than expected. Bureau Report, Business Today Television.